Stop scrolling for just one moment. What happened to the US dollar in Iraq today? In just another random market blip. Most people are completely missing what it actually signals about the entire currency system. Today, the dollar took a noticeable dip in both Baghdad and Erbil, and while that might sound like a routine fluctuation, the timing, the locations, and the way the prices behaved tell a much bigger story. A story about pressure building inside Iraq's currency system. Stay with me, because by the end of this deep dive, you'll understand exactly why this move matters, what it could be pointing to next, and why seasoned traders and observers are watching this so incredibly closely. Let's start with the hard numbers. This morning, Sunday, the exchange rate of the US dollar against the Iraqi dinar declined right at the opening bell in Baghdad's main currency hubs Al-Kifah and Al-Harithiya. These aren't just any markets, they are the nerve centers of currency trading in the capital. The opening rate dropped to 142,650 dinars for every $100. Now, compare that to the 142,900 we saw on Saturday. At first glance, it might seem like a modest change, but in the world of currency, these specific exchanges often act as the canaries in the coal mine, giving us early signals for the broader market's direction. Now, let's zoom in a little closer. Inside Baghdad's smaller, local currency exchange shops, the selling prices were recorded at 143,000 dinars per $100, while the buying prices were sitting at 142,000 dinars. This difference, the spread between buying and selling, is critically important. A narrowing spread, like the one we're seeing, often suggests a few things: reduced volatility, for one, and tightening liquidity conditions. It means the market is becoming less choppy and more controlled. It's a subtle but powerful clue that the dynamics are shifting under the surface. And here's where the story gets even more interesting. Let's travel north to Erbil, the capital of the Kurdistan region. Down in Erbil, the numbers were even lower. So, let's connect the dots. What does all of this actually tell us? A falling dollar in both Baghdad and Erbil simultaneously, in just a coincidence. It often reflects one of three things, or a combination of them. First, an increased availability of Iraqi dinars in the market. More dinars chasing the same amount of dollars naturally pushes the dollar's value down. Second, it could signal tighter controls being implemented on currency flows, making it harder to acquire and hold large amounts of physical dollars. Third, it could simply be reduced demand for physical dollars from businesses and individuals. All three of these possibilities tie back directly to broader monetary management efforts by the Central Bank of Iraq and the government. They are the puppet masters behind the scenes. This isn't just about today's price. Let me be clear about that. This is about market behavior. Think of it like this: when prices spike wildly up and down, it suggests panic, speculation, and uncertainty. But when prices decline steadily and in a controlled manner, as we're seeing now, it suggests that something is being actively managed. Someone is steering the ship. It's not a market in a state of panic. It's a market responding to deliberate policy actions. And that is precisely why these seemingly small daily movements are so significant. They are the breadcrumbs that lead us to the bigger picture. Now, looking ahead. What's next? What we lines be watching for in our next update is whether this downward pressure on the dollar continues into the early part of the week. Monday and Tuesday will be critical. Why? Because a single day can be an anomaly, but 2 or 3 consecutive days of this kind of movement can start to change market psychology, and expectations vary. Very quickly, it can build momentum. If traders and the public begin to believe that the dollar will continue to weaken against the dinar, they will act accordingly, which can create a self-fulfilling prophecy. This is the inflection point we are watching for. The movements we discussed today are a perfect example of why you can't just look at a single headline or a single price point. You have to understand the context, the decline in Baghdad, the lower rate in Erbil, the narrowing spread. These are not just random data points. They are pieces of a much larger puzzle. They tell a story of a currency system under pressure, but also under management. A story of deliberate policy attempting to steer the market towards a specific goal. This isn't the wild, untamed market of years past. This is a new phase, and understanding it requires paying attention to these nuanced signals. If you want to stay ahead of the curve and get clear, daily updates on the Iraqi dinar market movements without all the hype, the rumors, and the speculation, then this is the place for you. Make sure you're subscribed to Iraqi Dinar Daily and have those notifications turned on. We are dedicated to tracking the numbers, analyzing the signals, and explaining the patterns so you don't have to get lost in the noise. We filter out the sensationalism and give you the actionable intelligence you need. Remember, this market move today might look small on the surface, but, as we always say, it's the direction and the character of the movement, not just the number itself, that tells the real story. And the story that's unfolding right now is one you will want to keep watching. Thanks for joining me today. Stay tuned, because we'll have more updates coming your way very soon.